What's going on, guys? So in this video, I'm going to do a little bit of training. We're going to go over why you keep losing when it comes to day trading. Okay, so there's a number of different reasons as to why it is that you keep losing, why you can't become profitable, why you just keep spinning your wheels in the mud. And that number one, or at least the top, two, at least the top, I would say this has got to be in the top three as to why you keep losing. And that reason is patience. Okay. You do not have patience, guys. I know this is called day trading. I know this is called scalping. I know this is called, everything to the moon. I know this is called, I want a Lamborghini. I want, that big $1 million freaking penthouse. But the name of the game should actually be changed to waiting. Okay. Instead of trading, we are waiting. And I fall victim to this all the time. I do so much technical analysis. I do so much research, so much homework. I'm up, every single day, Pacific Standard Time, 5:30 in the morning, doing my prep work. And then as soon as that bell rings, I just want to get into it and I want to put on a trade. I want to go to my favorite stocks and I just want to, make a gajillion freaking dollars every single day. But, the sad fact of it is many of us are failing because we are just so impatient. If we would just actually be more patient and actually wait for setups to confirm and have confidence in those setups and follow good risk management, we would all be better off and more profitable as traders. So as we get started into this new year, I know that the market has not started off on a bull trend. I know that the market has been choppy. I know that it's been super volatile, big swings up, big swings down. Not a lot of things are holding their gains. Here's the number one thing that I can tell you for any market. Okay. I'm talking any market, bull market, bear market, choppy market. We have to be patient. And I'm going to show you just a quick example on how patience and how having confidence in your setups with good risk management is actually going to benefit you in the long term when it comes to, your P&L at the end of the week, your P&L at the end of the month, and actually growing these accounts and flipping these accounts. Two setups. What I have pulled up is the 5-minute time frame, and I have the triple Qs ETF, the NASDAQ 100. I have the ETF pulled up. I got the 5-minute time frame on my chart. The only indicators that I have on my screen, the purple line is going to be the 20-period moving average, which is the 20 SMA. I'm going to have the 50 SMA and the 200 SMA. Okay. Those are the only three indicators that I'm going to use. And we're just going to use the 5-minute time frame. What I've put on is an indicator to give me arrows for every breakout when we close above or below the 20-period moving average. For me, the 20-period moving average on the 5-minute time frame is one of the most rock solid simple moving averages that you can use when it comes to scalping and when it comes to day trading. It's going to be one of your strongest levels of support and one of the strongest levels of resistance. So if we just take a look at the screen here and we look at this first close above the 20-period moving average, came at 6:05 in the pre-market Pacific Standard Time. Obviously, the market does not open until 6:30. We know this. So what we need to do is when we see this close in the pre-market, okay, what we can kind of do is kind of look back at the data, see what was the candlesticks doing before it closed over the 20 and where was it getting rejected, okay? So if we just kind of go back, an hour, we put in this big long wick here, came all the way down. This could just be a false tick, but if we kind of look when we closed over the 20-period moving average, what we can do is simply just put a trend line over this resistance here. So if this is our close and this is the highest candle in the whole formation in pre-market, let's just go ahead and put a trend line here. Okay. All we would be doing is waiting for price action to confirm a 5-minute close over this area. As soon as we get it here, the first candle, 5-minute candle of the day, you can see we not only confirm this price action, but also close over the 50-period moving average. What we can simply then do is just wait for confirmation after this close. And if we get the following candle to confirm, okay, to confirm this price, we're going to take this entry. I'm going to draw another trend line here just to make it clear for the video. This price is going to be $376.73. At 6:35 in the morning, literally 5 minutes after the market is open, we get this nice big elephant bar green candle here. This is going to be our entry. And then we get 1, 2, 3, 4 pushes higher before we pull back. Okay. This price here, $380.13. Obviously, we're not going to catch the whole move, but if we would have entered into this play at $376.73, we could have essentially taken 1, 2, 3 pushes higher when we get this red close at 378. This is already a 2-point move. If you're playing options, these options contracts are going to move 15, 20, 25% just due to the fact of, of which exact contracts you're playing. Are you playing at the money, meaning that you're playing the strike closest to the current stock price? Are you playing one strike outside of the money, normally typically $1 over the current stock price? Or are you playing in the money, meaning that the contract that you're playing is currently, if we're trading here at 376, maybe you buy a 375, 374 call, that would be considered in the money. What we are looking for on these type of plays, where we want to be in these plays for anywhere from 5, 15, 20 minutes. Okay. Then you want to kind of evaluate what's going on after about 15, 20 minutes. Are you profitable? Are you breaking even? Is it chopping around? Did this trade fail? If it fails, we're just going to get out. And how we would know if this trade fails is if we close immediately. Let's say we get this nice big pop, and then this candle here at 6:40 a.m. closes underneath the 50 and underneath the 20. That trade failed. We're just going to get out of the trade. But if we can get 2, 3 points, especially in market conditions like this, where we don't go in with the intention to try to ride this all day, where we don't go in with the intention to, I want to make 20 points on my money. This is a triple Qs. This is an ETF. Can it move 5, 6, 7 points in a day? Of course. Is it realistic? Absolutely not. If you get 2 or 3 points on your money, if you're playing equities and you get a 2 or 3 point move on the triple Qs and you take 100 shares, that's $200 to $300 in a matter of 15, 20 minutes. Okay. If you are playing options and you get 15, 20, 25% move in your favor on those premiums, take the money off the table. We are not greedy. We are trying to replicate this process 1,000,000 times. Okay. We're not trying to find one trade that's going to make us $1 million, because to be honest, if you were to take 2 or 3 contracts of this, there's no possible way that you're going to make $1 million on this trade. There's no possible way that you're going to make, $10,000 taking a trade where you're only taking 100 shares. There's no possible way you're going to make 15 grand when you're buying 2 or 3 options contracts. It's just not possible. We need to be realistic. I'm going to give you one more setup here. You can see here at 7:45, we also got a close over the 20-period moving average. However, if we were to draw a trend line, does the next candle's price action confirm that high price? It does not, and simply closes below the 20. This play is considered a scratch. This play is dead. There's no play here. Again, here's a perfect situation, a perfect scenario where yes, we close over the 20. Okay. Yes, we close over the 20. Yes, we do confirm. And then we do get faked out here and we are forced to exit the trade. We would have entered this trade at 378.24. We would have exited this trade at 377.68. You're going to lose a cup of coffee on this trade. It's called a scratch. You move on. That's the name of the game. You're going to lose just as much as you win, but the whole idea is to win more dollars than you're losing. That's called good risk management. Just keep being patient. Let's wait for another setup. You can see here, I'm going to take this trend line off so we don't get confused. You can see here at 10:50 in the morning, not only do we get a close over the 20, but we get stopped right at the 50-period moving average. And right here at 10:55, we get that confirmation. So if I was to draw a trend line here, That price is going to be 377.50. We would take our entry on the preceding candle. As long as we do not close below the 20, we are going to remain in this trade. You can see here, we kind of confirm it 5, 10, 15, 20, 25, 30 minutes. We kind of chop around, and then we do back test the 20 period moving average about $1 lower than our entry. You would be experiencing a little bit of drawdown. This is where experience and screen time is going to pay off tremendously, because you already know this is like playing a video game. As soon as we close underneath the 20, we're just going to exit the trade and consider it a wash. As long as we are staying over the 20 period moving average, we're going to continue to stay in this trade. If we would have just ridden this trade out for another 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, I'll just say here another hour. I'll just go another hour. If we were to ride this trade out for another hour, we would have made another 2 points on our money. We could have collected our profits. This essentially would have given us 3 trade setups for the day. One of them would have been a loss for a very, very small amount, 50 cents, 60-cent loss. And the other 2 plays we would have taken, we would have maximized our profits and got 4 points total on our money. 3 plays, 60 to 75 cent loss, but a total of $4 on the win. So I will take a $4 win minus the 75 cents that we would have taken on the loss. That's $3.25 on our money that we would have made taking 3 plays on the triple Qs, but all we had to do was be patient. Guys, I hope that this video made sense. If it didn't, here's what I can do for you. I have a Discord. That link is down in the description box below. I also have a trading course. I have a private section, private channel in my Discord. I do one-on-one mentorships. I do watch list. I throw out the stocks that I am trading. You know, I throw out the levels. I throw out my ideas. If you guys want more help, if you want, you know, to join a trading community where you're not just going at this alone, join my Discord. It's completely free to join. Stick around. If you like the content that I'm sharing, you like what I'm doing, you want to figure out and know how to trade, whether you want to trade stocks, you want to trade options, I'm more than happy to help you. Join that Discord. That link is down in the description box below. Also, do me a favor and a solid. Subscribe to my channel, give me a thumbs up, leave me a comment, and let's all stop losing money this year in the stock market by remaining patient. I will see you guys all on the next video.